Good evening. I have with me tonight our wealth management crew from the Atlantic Union, and they're going to do a presentation for you. You've been handing out handouts that list all the interest for the year 2024, and I'll let them go through the booklet with you and any questions that you may have. They'll be happy to answer. They also did just let me know that if you would like for them to present the same thing for 2023, they would be able to do that as well for questions that may be lingering from previous years.
Thank you. I'm Mitch York, the Chief Investment Officer for Atlantic Union Bank. And on behalf of the bank, myself and my team, I would certainly like to thank Warren County. Thank you for supervisors, the citizens of the county for trusting us with your assets, for the tax dollars. We take that responsibility serious, and we're grateful for that trust and for your business. So I've been with Atlantic Union Bank for 2.5 years. I have 30 years of investment industry experience, 30 years of managing cash and bond portfolios. The first half of my career was almost specifically managing public money in Florida, where I resided, for cities, counties, municipalities, and lots of political subdivisions. When I joined Atlantic Union Bank, one of my first, my highest priority was to expand the bank's footprint in managing public money in Virginia, but even more importantly, because the first part lies in the second part, was enhance our capabilities. So myself, with an expertise in managing public money, cash, and short-term fixed income bond portfolios, I saw the need to reach out and hire another expert, and was fortunate enough to hire John Ockerman, who's here with us, who I can say confidently has the sharpest mind in managing public money that I've ever met. John has fantastic credentials. When I hired him, we hired him for 10 years. He was managing money for Virginia Treasury, over $30 billion public money. He was the portfolio manager for Virginia's local government investment pool, the LGIP, and for the Treasury's Virginia's extended maturity pool. So I can say with confidence that, and you'll see this when you see the investment results and you see the well thought out portfolio that you own, that you have a world-class team looking over your money and managing it very capably. And so with that, I'm going to turn it over to John, where he can go over the results and the portfolio.
Thank you. So the first thing they did cover is on slide 3. And just to reiterate that all of the funds in Warren County's 3 accounts with the Atlantic Union Bank are managed and compliant to the Investment of Public Funds Act of Virginia. They are fully invested and earning a competitive rate of return, and there have been no realized losses in any of the accounts.
You get these signs digitized that we could show us for the audience, or?
Not right now, unfortunately. Finished off this slide deck very recently, but
So when you say slide, you refer to page?
just, yes, a page number. Yes, sorry. On the 4th slide, there's an overview or 3 accounts. The total dollar value is just under $16 million. And in calendar year 2024, the 3 accounts earned 4.90% net of fees. That is comprised of, roughly speaking, 4% interest income and then 0.9% increase in the value of the holdings. With the 3 accounts, the largest of which is account 8018. And you see that has about $15 million in it. The other 2 accounts are smaller special purpose accounts. So when I say that the total rate of return, 4.9%, was a coupon interest and an increasing value of bonds, when we're investing in debt securities. There's two ways to earn money. So you could buy a bond at par at 100 with a, let's say, 5% coupon. At the end of a year, you'd get your $100 back plus 5% coupon interest. Conversely, you'd buy a discount security that might be priced at, let's say, $95 and would pay out at par. So that security would not pay a coupon, but the difference between the price you paid for it and the maturity value of the bond would be your interest income.
But breathe was, just so I understand. So the account
018. Now that's the what was remaining after the books closed for fiscal year 24,
This is as of December 31st, 2024.
2024. Okay.
Yes. As of as of June 30, 2024, the value per portfolio was, if you were to flip ahead to page 9, there's a month-by-month account reconciliation. And so the total value of the portfolio at that point was $17,530,397.38. And it's just the reason it is higher, notably higher at June 30 was there was a $2 million withdrawal on October 31st.
So, just so I understand, so would this be considered our wealth management account? Okay.
Yes, these are both.
Okay, I just need to put that in my understand the definition of these. So, okay.
I'm finding out so we started out with, and you're showing the total return at 2024, which, say if I put that account number 8018, and that was 14,950,000, and so and that was 4.92%. But were there, and you say that these are bonds. What type of bonds are they?
Sure. So the Investment in Public Funds Act lists specific securities that all types of public funds investors in the Commonwealth of Virginia can invest in. Okay. So the types of securities in a more portfolio are U.S. Treasury bonds, okay, U.S. agency bonds, so that would be notably Federal Home Loan Bank, Federal Farm Credit, Fannie Mae, and Freddie Mac. Then commercial paper issued by the highest rated issuers with a maximum maturity with 270 days and no more than 35% of your total portfolio in commercial paper. And then bank CDs.
So I know that at least with the seed, you can put the money in today and you could take it out tomorrow, be on day in, day out. What do you have with these bonds? I mean, do you have penalties that if we put the money in and we take it out before a period of performance, like in this 3 months, 6 months, maybe a year, are there penalties that we pay on that?
No. So the LGIP is a stable value fund, and so you would deposit money out of the dollar and take it out. Or all of us individually, it would be a registered money market fund. Okay. Your portfolio is a number of bonds that are all laddered out so that there are regular maturities. And they're providing regular reinvestment opportunity for as interest rates change or whenever your dates change and you need to take money out. The cheapest way to sell a bond is for it to mature. And so that's one of the reasons we had these regular maturities throughout the portfolio, but now there are no penalties if, let's say, they purchased a bond in 2020 when interest rates were 0, and then you wanted to sell that same bond today when interest rates are 4%. The value of the bond, you had purchased it at one par at 100,
that the value will be lower. There's not a penalty, but that would be a realized loss, and that's not.
Now, do you do any investing in money market funds? Because I know that some of these funds, like Vanguard, it ain't pretty well. You know that around 4.5, it's really 4.5 from 4. Well, I think the 4.92%.
Yes, so we do utilize a money market fund for sweep interest. We use it both from Big LP. And it's rated AAA.
Oh yeah.
That fund currently registered money market funds are around like 4.25%. And so
And any investments in the commercial paper that has that maximum maturity, 270 days, would be a money market type security, same type of instrument as the little market funds would be owning as well.
Okay. All right.
briefly, the next 3 pages show the collected interest by month by account. And so in the largest account, fluctuated between $40 and almost $90,000 per month. For the total calendar year 2024, the collected interest was $607,000, $607,443.52 in this one account. The 2 smaller accounts had earned roughly $6,000 and $21,000. And then on slide 8 has the market value at every account. We can see that the value is gradually increasing, and this is what we expect to see from bond in a relatively stable environment and relatively short portfolio, which according to the Investment Forward Funds Act, they no farther than 5 years. So the average maturity is less than 1 year of the portfolio. So even if interest rates are rising and falling, we don't expect dramatic changes in the overall market value. And then, as I mentioned previously, slide 9 has that monthly reconciliation with the market value, collective interest, the collected interest yield, and then realized gains, and then transactions. So just that once you are in withdrawal.
So you're showing about 17 million there. Are there any other funds?
At Atlantic Union Bank, these are the Atlantic Union Bank Wealth Management. These are really count them.
So, Mr. Butler, I can add to that too. We also have all of our working bank accounts at Atlantic Union as well. We have our money market sweep account there. And so that account also earned interest for us for the year. So from January through December, we earned $330,024.11. So in each month, the interest was 2.43%. With the exception of November, it was 2.42% in November. So that interest every single month comes in through the money market. It's a sweep account. So each night it sweeps from all the other accounts to get the most interest for that day. And then it disperses out to the various accounts where it needs to be to cover incoming checks, ACH debits, whatever. And that is the money market account. So that's the main account in Atlantic Union. And then there are multiple accounts under that account that funnel into that account.
And how much total is in that?
So at the end of December, that account had $24,241,296.02. That account is daily changing. So that business account, that's our working account. So every business day, that account balance changes.
With the
Well, essentially, in that account would be tied to, I was just looking at the, on page 9, the collected interest yield has a lot of variance month to month, as high as 6.4% and as low as 2.24%.
So the money market account is not tied to the wealth management accounts.
So could you then explain what is the rationale that thing is using up and down as that?
Sure, that's due to the timing of when bond coupons are paid. So if there were, let's say in September, if there were a number of maturities of bonds that were purchased at a discount, all of that interest is realized in that month. And then bonds like treasury bonds, agency bonds, typically pay interest twice a year. So you might also be a situation where one month is higher than the next.
Yes, I'd like to know why we moved $2 million out of our account in October.
I can answer that. That was a cash flow issue. Right, the money market account was down to almost $1 million, and November, that is the beginning of November before the tax bills go out. That's, from what I've been told historically, that's a very low cash flow time. I had school payroll coming in, and looking at what was going to come in, it was just too close for comfort. So I moved that $2 million into our money market account. So it went straight from wealth management into money market. I was able to move that without any penalty or loss. So I discussed that with Mike Snow before we moved it and moved it over into the other account.
So are we ever going to repay the $2 million that we took out of this from?
We are.
Or are we just going to rely on interest earned?
No, but to a money market account, and actually my intention is to move that amount of money from that, the 2 million plus another 3, into the VIP accounts that I have open. So I'm going to start with that $5 million deposit into that.
So that money will be coming from our small fund account?
It will be, yes, coming from the money market.
Money market account?
Right.
And that's the account where we received all of our tax revenue and
Yes.
fees and
Yes, ma'am.
all the other.
Everything is funneled into that money market.
So we're able to to pay back our wealth management.
Right.
All right, thank you.
Can you tell me, and how does that state gun work? You know, the one that's the day in, day out. Can you use that one to also pay your the bills?
No.
No. Okay. No, it is an investment account. Or the difference is, and I'm going to let John speak to that as well.
Okay.
Because Atlantic Union has the same type of investment account that VIP has, the Virginia Investment Pool. I'm sorry. Oh, I'm sorry. Okay.
The LGIP is not does not disperse money except to World Bank account. So that would be a security procedure. So you're not paying your bills out of that. Then the LGIP transfers to and from the bank account. And so then a bank account is like all participants would use to pay bills.
The only reason I was asking was because I know that you're showing this account here pays what about like you said about 4.92%. The one that you were talking about pays about 2.5%.
Yes.
And I was just wondering, I know that the state would picks about 4.9%. That's only 2% difference, but that 2% on that $20 million, that could be a kills a change over.
It could be, but you can't, as he said, it's an investment account, so you can't pay anything out of that. So you can deposit from your account into your investment account, but you can't put your daily deposits of revenue in there. You can't funnel checks through there. So it's not a working business account. It's an investment account. Now, having said that, having that quick turnaround in and out does enable you to move money more often because you know you can get it the very next day if you need to, which, You know, when I moved that $2 million, I waited because it's in an investment account, so you don't want to move it. 2 months ago when I did that, but I felt like at that point, I knew that it was going to be a couple more weeks before the revenue was going to be hitting from the tax bills. And you needed to put some money into the money market account. Hope that answered your question. The interest, the greater interest is going to be on the longer term investments. So, sorry. Do you guys have any other questions?
Yeah, I had the question. Is this a fundamentally different picture of things that we've been given recently?
We have, we had a presentation at some point that indicated we basically earned no interest on our money for the year, and now it's 5%. I mean, it's right. Just added up quickly about $730,000 of interest. Are you familiar with the meaning? Like when people approached the podium and said the county have earned no interest on its money, and
I'm aware of that.
Okay.
So I think where that may have come from, and I can explain that a little bit. The general ledger, the interest income needs to be recorded in the general ledger every month. Historically, it's been recorded as an adjustment. So those adjustments were done when the interest income would come into the accounts. Those adjustments were not done. Historically, they'd been done in the treasurer's office. So the general ledger was not showing those interest amounts. We were collecting the revenue. We had the revenue, but the general ledger wasn't showing it. So I think maybe that is where that came from. But the figures that I provide every month on those accounts, the difference from the month before, that is the interest earned. So you could go back and add those up for the whole year. And that's where you would get your $311,718.32 in the weight management account.
So that in the free account.
Yes, sir. So I think that may have come from the fact that the general ledger is not up to date. I'm working with finance right now to change those adjustments to pay just like every other revenue that we take in because, excuse me, in fact, it is revenue. We collect interest income from the banks, and it is revenue. So we're going to change that in the general ledger so that it is actually recorded as a pay as opposed to an adjustment. But I wanted you to hear directly from Atlantic Union because I knew that they would better be able to explain.
well, we see that's a remarkably different picture than I think was presented before. But we've been sitting here getting nothing, earning nothing this year.
Yes,
So it's definitively not true.
definitively not true.
So there's 49.
Or a misconception. I'd like to put it.
Based on reporting, I guess, or non-reporting, or something.
Yes, sir.
Right.
Yes,
Confusion.
right.
Well, I know that there's a very big effort to get coordination, better, seamless coordination between Finance, Treasury, Commissioner President, sir.
Absolutely.
Would meet us out there calling that.
We are working diligently at that.
Very fun.
Make things more streamlined.
Yeah. So it's $40 million of cash and combined investments in the sweep account.
Wait, look at, in the money market sweep, we have 24 million, and then it's about 16 million, I think.
Yeah. Okay.
Yes, sir.
It's about $40 million.
Yes.
And is there any attention or difference of opinion about the location of this money that's in the sweep account and how much you could be earning? Did you just basically explain that's the best you can be done? Could the DC be able to come in and out? Or
Well, no, I think it can be improved on. Of course, this was my first year, so I needed to get a feel of the movement of the money each month, where the low tides were, where the higher tides were. And I think that can be improved on because I think that right after taxation and you have collected all that revenue, I think there are 2 or 3 months that you can move more money into the investments, which will earn more. But again, like I said, that's, for a shorter period of time. So you're not going to earn
Yeah.
what you earn in the longer investments, but you can earn more than the 2.43.
Okay, but nevertheless, the delta is to improve from 2.4 to maybe 3 or something, and the wealth management account is in the mid fours for 2024.
And those are good numbers.
Yeah, okay. Well, that's good to know. I'm happy to receive that information. Do you have anything to add to this in terms of prior understandings?
I would just ask the board to look at your audits. Your audits, 21, 22, 23.
Well, that was going to be one of my questions. Where are you going to be able to give the information so that you get audits done?
So we're working with finance. We have still not received a turnover audit yet from the end of 2023. So, but we are working on the numbers that we hacked from December of 2023, and we're working, finance has been very helpful working with us on getting the reconciliations done. So we were hoping to have them done by the end of January. If you all know, the chief deputy took a job in Purcellville as their chief financial officer. So unfortunately, we lost her a couple weeks ago. She's working part-time to help, so she's coming in on Saturdays to help with that. Hopefully that, that will all be completed in the next couple weeks, but until we have clear numbers from the turnover audit from December 31st, 2023, we're not going to get numbers that we know have integrity.
Would it be possible we get a list of these investments to see and when they mature?
He said he could do that.
Speaking of prior understandings, if I recall, when Davenport was here, we talked about bond ratings, among other things. And I think the rule of thumb, if I recall, that they stated was 15% of your budget should be in the reserves, which is right around 15 million.
Yeah, that's what this is.
Yeah, and I'm just thinking about the 2 million withdrawal. That gets us pretty close to that level. Makes me a little nervous. So just to have that in mind for cash flow purposes, we need to make sure we maintain that level and keep our bond rating up.
Oh, absolutely. Melissa actually ran those numbers, and we were still in the good margin of that 15% of reserves.
Yeah, because we have a policy that says that we have to have 15%, and so I agree with you. When the board makes decision on funding things that are kind of out of scope of the fiscal year budget, and they looked at they will be using this to backfill.
Yeah.
That they need to be very cautious so that, and when they remove that money and making sure that we reach the T%. My question is with the interest that we've made, and knowing that we have the 15% ceiling on this, and is there at any point in time that we should move this money into the general fund that we can use it?
Move it out of it?
Out like right now for 13%, it is like $13 million. I'm swagging these numbers right now. Okay, so this is just a scenario.
Oh, okay. Let's look at the numbers.
So I'm just swagging it right now. So at the end of 24, with our wealth account, we had $14 million. So if our 15% ceiling is 13 million, we have some extra, funding there. Yeah.
Oh, move it from investment into our.
Now, move it into the general fund to use it for, special projects or,
Well, and that's what I did with
utilize risks, the financial risks and that kind of thing. So I don't know if we do that, or is that something to consider, or?
We could certainly consider that. That is not something we've done in the past. When I moved the $2 million, it was just because
Well,
of
that's
cash
your
flow.
point, cash flow, you haven't worried about
Right.
that, right, yeah. So, it's just a thought.
Would remind the board of the chart that you have that shows your monthly cash flow for the last couple of years and the cycle of how that works. And it shows when you come down to, you were down to just over 20 million total in the fall before December taxes come in. And you'll be the same place by April. I don't like
Savings to sliding into the general fund must be have an actual reason, like when the chiller went down and we had put up $500,000. So I think we leave it in there until we have an actual need. To me, is a better, if it's in my checking, I feel like that's, it's in my savings, I leave it alone unless there's an emergency.
Basis my take.
Any more questions or comments?
Thank all of you for your time and consideration. And anytime you have a question, my door is open. And I welcome any and all that want to come in and see our processes and procedures. You're welcome.
Thank you, Treasurer. While the Treasurer is here, sir, I'll remind everyone that the Treasurer is supposed to be making a monthly report on these accounts to the board on how much is there, what the balances are, and what the interest is.
And I can send that, I can do this with Zach, and then do a handout for all of you so that you have that each month. I've been sending that to Ed usually by email, but I can certainly do that.
Well, yeah, oh, I'm sorry.
I was going to say that if everyone else agrees with this, I really appreciate your coming up and giving us a first hand.
Okay, well, and I just wanted to add that the treasurer does report that information to the finance audit to the finance every night. And so, we could, once the committee receives it, we can send it to whoever, we'll send it to the board. Unless Dr. Daly wants to take on that responsibility.
That will work. And I'll let you know the statements usually drop after the 10th of the month, somewhere around the 12th to the 15th for the previous month. So we can do that, and I'll provide them to the finance committee. Thank you all very much.
Thank you.